Imagine being told that, the absolute most profitable thing you can do in the market today is just doing nothing.
Right, it sounds totally counterintuitive.
It really does. But welcome to the deep dive. Today, we are unpacking the Alpha Root preliminary morning brief for April 27th, 2026.
And we should probably clarify right out of the gate here that the data we are looking at today is strictly a preliminary scan.
Yeah, just for your early planning.
Exactly.
Yeah.
It's giving you the architecture of the battlefield before the fog lifts and the trading day actually kicks off.
Well, looking at the U.S. indices this morning, that battlefield looks pretty paralyzed.
Yeah, completely gridlocked.
Because the prescribed action for both the Dow and the S&P 500 is simply to wait. I mean, let's unpack this. Why is waiting treated as an active strategy? Isn't doing nothing just doing nothing?
It might feel that way, sure, but waiting actually defines your playing field. Right now, both of these indices are stuck in what the brief calls an intra-range rotation.
Like a holding pattern.
Right. So for the Dow, the US 30, the market is trapped between roughly 48,860.4 on the bottom and 49,521.1 on the top.
Okay, and the S&P 500 is basically in the same boat, right?
Yeah, exactly the same stalemate. It's boxed in between 7,103.1 and 7,168.1.
So when the brief says intra-range rotation, we're really just looking at a tennis ball bouncing between the floor and the ceiling.
That is a perfect way to picture it. The buyers and sellers are at a total standoff, just waiting for a catalyst.
But the longer that ball bounces, the more violent the breakout is going to be when it finally hits, right?
Oh, absolutely. And what's crucial here is the concept of invalidation. Professional traders don't really trade on predictions.
Right.
They trade on invalidation levels. They plan exactly where their thesis is wrong before they even plan where they're right.
Wait, so the brief mentions waiting for sustained acceptance outside those boundaries before making a move. What does that actually look like on a chart?
Well, it's about holding ground.
So not just the Dow briefly poking its head above 49,521.1 for like 5 minutes.
No, a quick poke is just noise. Sustained acceptance means the market breaks that ceiling and actually starts building value there. It holds the new ground.
Ah, okay. So until that boundary is decisively broken and held, the market hasn't chosen a direction.
Precisely.
Okay, but if the equities market is effectively sitting in a waiting room, day traders aren't just gonna, turn off their screens and go golfing. Where is the actual momentum today?
Well, think about how capital flows. When the biggest indices in the world flatline, capital gets bored.
It wants volatility.
Exactly. All that restless energy has to go somewhere, and today it is flowing directly into the currency markets, specifically the dollar-yen.
Yeah, the brief is flagging a post-breakdown continuation for the dollar-yen dropping below 159.30.
Right, so the floor basically gave out.
And unlike the U.S. equities, the explicit action here is very clear. It's a sell.
The narrative shifts completely when you move to currencies today, but, risk management is still paramount.
Right, because even with a high momentum breakdown, you have to know your invalidation point.
Exactly.
Which, according to the brief, is that 159.30 line. So if the dollar-yen crosses back over 159.30 and achieves sustained acceptance above it, the sell thesis is just entirely busted.
Yep, you get out. That line is your structural safety net. It takes the emotion completely out of the trade.
Which is exactly why you need these precise levels. Now, as a reminder, everything we've mapped out for you in this deep dive is just the preliminary context.
Right, it's only half the puzzle.
So be sure to catch the full podcast at 08.55 NY time.
And then, to get the final validated numbers, you need to validate with the final 0900 AM report at alpharout.forsell.app.
Do not skip that step or you are flying blind.
Absolutely. And as you wait for that final data to drop, here's a question to consider.
Oh, let's hear it.
If the U.S. market suddenly break out of these tight wait-and-see ranges later today, while the dollar-yen continues its aggressive breakdown, how might those shifting dominoes force a total rewrite of tomorrow's playbook?
Wow, yeah, that is definitely something to keep in mind as you set your alerts today. Grab that 09.00 AM final report, and we will see you next time.